So the non-qualifying costs include 1, cost of land on which the building is constructed. Now let's explain that. That is because you remember capital allowances are granted in place of depreciation, mainly because we had explained earlier that depreciation policies depend on the accounting function in a particular entity, and therefore that means for different taxpayers with similar assets, they are not depreciated in the same way, and that in taxation is not equitable. And we said much earlier that equity is the main canon or one of the key canons in taxation. So for equity purposes, then we said we disallow or we disregard everything that the accounting department or the finance department has done, or the depreciation that they have allowed, and instead of that we seek to standardize and be equitable to all the taxpayers. That is why we are looking at these different categories of capital allowances. So given that we are replacing depreciation, and by definition depreciation is the loss in the value of an asset because of wear and tear, usage, passage of time and such, and in Kenya and across the world, the land does not depreciate. Land normally appreciates. So therefore, we cannot grant capital allowances because we are trying to replace depreciation. We are seeking to standardize depreciation, but land is appreciating. That is why cost of land is going to be a non-qualifying cost, because if you remember from in financial accounting, normally you revalue land after some time to reflect the current market value of the land, so that your financial statements can reflect true and fair view of the financial status of the organization. So cost of land, then cost of machinery within the building. Within the building that qualifies for wear and tear. And the third one, non-qualifying parts, which will be basically what is going to be for wear and tear. I can delete that. So this will not qualify. Now, we want to look at the IBD rates. And again, these rates are given by the commissioner, and they vary from time to time. So they can be revised when a budget is read, or after we do a finance bill. We can revise from year to year to year. So we will have the nature of a building on this side of a building. And then we'll have the prescribed rate. So you can divide our page into two. So this side we have the prescribed rate. Now why? Because if you look at this, we had said that IBD is granted on straight line basis depending on or based on the nature of the building. That is why we now have nature of the building. So an industrial building like warehouse, go down, this warehouse store, go down, and then a building in use for welfare of workers, that will have 10%. So 10% of qualifying cost. You remember qualifying cost is the cost of that building up to the first time that the building is being used. So if you're dealing with a warehouse, then it's the cost of excavating, foundation, building the building, finishing everything up to the first time we use the warehouse. Or if it is the building in use for the welfare of workers, up to the time that we will use the sports center or the gym or the swimming pool, the first time we use it. This will also include labor quarters, 10%. So labor quotas, 10% of qualifying cost. Now, let's look at this point, point C, that a taxpayer can apply for accelerated IBD rate from the commissioner. Now, we said that acceleration is because you feel that your building will not last for the estimated time by the commissioner. So, like in this case, we're going to claim 100% at the rate of 10% per year. So it means the time it will take us will be 100% divided by 10, which is 10 years. So you count the first year of use of, for example, the labor quotas. You claim the first year, second, third, fourth, like that, up to the 10th year. So that is the first one. Then we have commercial buildings, or we specify the showroom, the offices, showroom, offices. That will qualify at 25%. Then we have hostels at 50%. Let's see. Educational buildings. Now, for these educational buildings, you must seek prior permission from the commissioner. So rental, residential, buildings at 5%. And these rental residential buildings, it will also include the cost of building access roads to these rental residential buildings. So these are the rates that we are going to use. There's also the cost of infrastructure. Infrastructure in rental residential buildings in planned areas. Rental residential buildings in planned areas. This is granted 25%. So we've come to the end of our lesson today. We have introduced industrial building deduction or industrial building allowance, and we have said that like all the other capital allowances, it is deducted, the cost of the qualifying building is deducted against the taxable income of a taxpayer, so that we can arrive at the income on which now we will assess using 30% if it is a company, or the graduated scale rate of tax if it is an individual. We have made some general comments on industrial building deduction, where we said you prorate it to the period of use and you grant it depending on the nature of the building and the prescribed rate that the commissioner has given. We also defined what an industrial building is, and we read from the Act, and then we summarized the Act on the board. So we said an industrial building will be the cost of a warehouse, a store, or a godown, whatever name you use, a building in use for the welfare of workers, prescribed labor quarters, educational buildings, rental residential buildings in planned development areas, very important, commercial buildings, and any building that the CS, the Cabinet Secretary in charge of Treasury, may gazette as an industrial building, a building in use by an agricultural contractor, and a bridge, tunnel, or a hydropower undertaking. Then finally, we looked at the non-qualifying costs. We said the land does not qualify simply because land does not depreciate in value, and then the cost of machinery within the building that will qualify for wear and tear. Wear and tear is another category of capital allowances. Then we looked at the nature of building and the prescribed rate.